Good morning and welcome to TradeStation's Wednesday morning market briefing. Today our presenter once again is Mr. Bennett McDowell. He's doing some excellent work for us this week at TradeStation. Thank you very much, Ben. Today, in the way of reports today, the consumer credit numbers for April are going to be reported. Some companies are holding their annual meetings. Dick's Sporting Goods and Michaels and Wesco International, Alliance Data Systems are all holding those meetings. Molson Coors Brewing and Raymond James Financial meets with their investors today. So on the marketplace news front, it's kind of quiet, but you never know. So we're going to talk to Ben in a minute, and we're going to find out exactly things that we do need to pay attention to as the market cruises along today. First of all, remember that everything, any of the parts of this presentation that you hear are going to be for educational purposes only. All the symbols and trading ideas that we discuss are for demonstration purposes. They are not recommendations. This presentation is not an offer or a solicitation of any kind in any jurisdiction where a TradeStation affiliate is not authorized to do business, including but not limited to Hong Kong and Japan. Active trading is not suitable for everyone, so please read that disclosure information in the PDF handout in those documents that I posted in the chat panel at your leisure. Also, these documents are available on the TradeStation website. Premium platform customization and setup service is tailored to your own unique needs. Schedule a private 60-minute one-on-one session with a seasoned TradeStation platform expert. The service includes platform training, trading environment setup, and customization. So make your online reservation now. Ben McDowell is the founder of TradersCoach.com, which provides education for traders in all markets, all time frames, and at all levels. Ben is considered an expert in technical analysis, and he has developed his applied reality trading entry-exit software used by traders in over 50 countries worldwide. He's written 3 best-selling books, and he wants to share some of his expertise with us this morning. We're very happy to have him. Ben McDowell.
Don, thanks so much. It's great to be here, and welcome everybody to today's market brief. All right, let me just show my screen here before we get going and make sure everybody can see that, and also make sure everybody can hear me okay? Don, I heard you fine. All right, so maybe, Carlos, something on your end needs adjustment, but just go ahead and let me know, a few of you out there, if you can hear me okay and see my screen in front of you now. Should be okay. Terry saying yes. Okay, good. All right, I'm going to put up a link right away, and this link is to a report that I do every time I speak here at TradeStation, and this is a summary report. So let me just quickly walk you through what that report looks like so you kind of know what you're getting here. All right, so give me a second. All right, that's the intro page to it. And as you scroll through it, there's information here. The first thing actually I want to talk a little bit about is this week's calendar. As Don said, quiet day today, and he's absolutely right. MBA mortgage applications are out. I always like to look at those. EIA petroleum status report, but none of those are going to offset the market. Thursday, we got jobless claims. Don't expect that to be a problem. And Friday's a quiet day as well. We're going to look at the Dow Jones Industrial Average. So we're going to take a good close look at this chart in just a moment. Again, this is all on the report for you. So whenever we talk about levels, target levels, price levels that are important, you don't have to write them down. Just get the report, and they're right here on the report because we give you this information right here. And also, too, if you want to learn more about our services, that's on the report as well. So I put the link up to download this report. It's absolutely free. Okay, the only thing we ask is for your name and email address, and that's it, just to keep you updated on the markets. All right, couple things to also go over before we get going here is that, a lot of people have been asking me, with all the stuff going on around the world, the terrorism and all this kind of stuff, how is the market staying so stable? So, and it is stable. I mean, it's been up really since November and it hasn't really faltered. So let's take a look at that and go into individual charts and discuss that. One of the things I want to start out with is the daily Dow Jones Industrial Average chart. And you're going to see some things on here. I put numbers on here, and these correspond to the Elliott wave. How many people out there are familiar with the Elliott wave? I know if you've been coming every week, you probably know it by now, since I do talk about it often. But there may be a few of you that are not familiar with it. Most people looks like they are, okay? So these numbers correspond to waves in the market. And I want to take just a quick second and put a white page up here and actually show you very quickly how the Elliott wave works. We have a starting point I'm going to put down here as 0. So in an uptrend, uptrends don't go straight up, do they? They go in zigzag. Well, these zigzag formations are what we call the Elliott wave. And the first move up is what we call a 1. And then when that falters, it gives way to a correction, which is a 2. And then we have the strongest of the trend, which is a 3. And then we have a pullback, which is a 4. And then we have the final move to the upside, which is a 5. Now, a couple things to note here. One is the momentum between 4 and 5 is much less than the momentum between 2 and 3. So we can always see bearish divergence in an indicator that measures momentum. And we use something I've developed specifically for this called the OWL. We'll talk about that, and you'll see that in just a moment. The other important thing about the Elliott wave to note is that there are waves inside waves. So notice that waves 1, 3, and 5 all move in the direction of the uptrend, where waves 2 and 4 are corrections. Now, in waves 1, 3, and 5, there's 5 little waves inside. These are called impulsive waves. So impulsive waves have little waves inside. Now the correction waves have smaller type of wave structures called ABCs. Sometimes they can get complex, but for the most part they're ABCs. So whenever we talk about a wave, remember there's waves inside waves. So the line in a wave is not straight up, it's always a little zigzaggy. Now, if you remember on the daily chart, I said I had us with a wave 3 at the top. So we're somewhere in this wave here. And what we're going to do in just a moment is actually go to a lower time frame so we can actually look at these little waves inside this wave 3 we see on the daily chart. So we're going to look at a 60-minute chart, and we'll be able to see where we are in that. So we're going to come back to that in a minute. Please note, too, that this is an uptrend. But you can also have 5 waves on a downtrend too. So there's uptrends and downtrends, and there's also 5 waves inside those waves. So that just gives you a little bit of a discourse into what all these waves mean, because it can get confusing. So I wanted to just talk a little bit about that and show you that on the daily chart we are in a wave 3. Now, when you're in those impulsive waves, like a wave 3, what happens is the market usually ignores the bad news and focuses on the good news. Now, when you're in a downtrend, the opposite occurs. The market focuses on bad news and ignores the good news. So that's why, you can have a lot of stuff going on, which are kind of negative right now. Terrorism over in the UK and so forth. So the market has been pretty stable through all that. And the reason for that is because we're in an impulsive waves, okay? So that's what's important to remember. Now, I want to also point out something as well, is that this move to the upside here on this daily time frame has really been going on ever since the election in November, okay? That's way back here, okay? So this has been going on for quite some time. So this is a mature wave 3. This is not something that just started. This is rather mature. So we're seeing higher highs in this wave 3, but we're also seeing bearish divergence in the OWL inside wave 3. Things are still not, there's nothing red down here on the indicators. This is the OWL. which we use to measure that type of divergence. This is the PTF, and this is the TLM indicator. All right, and if you want any of these from traderscoach.com, go to their website and you can purchase them there. Okay, but these are indicators that load right onto your chart and give us a pretty good indication and help us count the Elliott wave with great accuracy. So this looks like we're still in a wave 3. It has not faltered yet. And so I think that's important to realize at this point. Now I want to go to the 60-minute chart and give that a second to load on your side. And now we're going to go inside and take a look at the waves inside wave 3. So as you can see here, we have a 3, a 4, and a 5 on this time frame. So let's quickly run back and take a look at our whiteboard here a second. And if you remember, 1, 2, 3, 4, 5. So this is 1, 2, 3, 4, and 5. So again, on the daily chart, we're right up in this area here, in the mature part of this 3. And on the smaller time frame, okay, there's 1, 2, 3, 4, 5. We have 3 and 4 labeled on the 60-minute chart. And the wave 5 target zone, which is measuring the smaller waves inside wave 3 on the daily, is indicating a target zone for wave 5. So we're right about in here. So this is how we can determine exactly where we are inside this wave 3. So now let's go back and go to the daily chart again, the 60-minute chart again, and take a look here, and you can see where these waves are here. So the target zone for the top of this move or trend is up around 22,179 to 23,325. So this is what we call a Fibonacci extension target zone that helps us identify where 5 should end. So when wave 5 ends on this time frame, we will also end wave 3 on the lower time frame. So let's go back to that daily chart for a moment. And here is where we're saying when wave 5 ends on the 60-minute, we will then have wave 3 over on the daily. All right, any questions on that? Now, TJ is asking, are there any exceptions to this where the waves can't be counted? Sometimes you'll look on the time frame, TJ, that you want to trade. Let's say you're trading either a 2-minute time frame or a daily time frame, doesn't matter. But sometimes markets go sideways. And when they go sideways, it's very difficult to get a count because that sideways motion is a correction. And it's usually a correction on a larger time frame. And what you're doing is looking at the waves inside that correction. So sometimes it's very difficult. When I usually see a chart like that, I move on to a more clearer chart on the time frame I want to trade. Good question. All right, so any questions before we start looking at some stocks here? So the summation of what I have to say here for today is that it looks to us like the move to the upside, the bull market, will continue a little longer, but we need to be concerned when we get up around 22,179 to 23,325. So I would say we got some more movement. Now, realize that there's waves inside these waves too, so it's not going to go straight up. It's going to maybe come down, go up, come down, and eventually reach that area there. All right, the other thing too is that to take away from this just very quickly is that after 3, we go into 4, so we'll have a pretty hefty correction, but not a change in trend. And then after 4, we can expect a 5 even going higher. So we're actually still in a bull trend. Even though we may be in a 4, it's still an uptrend. It's just a correction in that uptrend. So we've got quite a ways left on the overall bull market. But what you're in now is the most enthusiastic part of it. And after this ends, we will have a correction, bring it back probably into the upper teens before it heads higher. All right, so that's just a quick summation. Now, these charts were drawn on Sunday. So if we actually go over to TradeStation here and take a look at the live charts, not much new information. It's pretty much, pretty stable. As I said before, Here's the weekly chart. Monthly charts are all stable, and the 60-minute chart here is stable as well. Notice the PTF is green here, so basically when that's green, there's a high probability, find the highest price in that green area, and there's a very high probability we're going to go higher, so that also confirms markets move to the upside is not over. Okay? All right, let's take a look at some stocks here. First one I want to take a look at is Lumber Liquidators. We've talked about this one before. Now, if anybody has stocks they want me to look up there, feel free to type in the caps, okay? We'll try to get to most of them. We may not be able to get to all of them, but we certainly will try. All right, so quick thing on this for our newcomers here. I use multiple time frame analysis, so I have 60 minutes set up on the left. This gives me my short term. Daily is set up in the middle. This is my primary time frame. This is where I'm going to really do all my risk control and so forth on. And then on the far right-hand side is my weekly chart, and this is from our long-term analysis. So if you were even day trading, you still set your charts up like this. Let's say you were day trading, I don't know, the S&P E-mini 5-minute time frame. You could put the 5 here, the 2 here, all right, and maybe something like a 20 or 30-minute chart here, depending on what you want to work on, okay? So that's kind of the summation. The primary time frame goes always in the middle. All right, so this is our daily time frame here. And notice that this was a wave 3 bottom. How many people out there got into Lumber Liquidators? I know people that subscribe to my More service are definitely in it, but I don't know who from that service is here. So I'd be interested to know if anybody is in Lumber Liquidators. This was a popular one. A lot of people were in this. Okay. All right, Albert, you should see a chart. Okay, you should see a chart. If you're not seeing something, there's something wrong on your end. Okay. All right, so you're watching. Okay, good. All right, so Lumber Liquidators, you know, one of the key things about trading a 3 to a wave 4 target zone, which is up here, is it's a corrective trade. You're not trading technically with the trend, you're trading the corrective wave in a trend, and the trend is down on Lumber Liquidators. So this is a 3 down, 4 up, and then you're going to have a 5 down eventually here, right? So what we want to do is when we trade waves 3 to 4 is make sure there's enough profit opportunity. So we always look for profit opportunity of at least 50%. And of course, we had that here. We were able to get in really early in the teens, and now we're up to around 27.32. But we still expect this to get around 48 to 72. All right, so there's still a tremendous return available. Now notice the PTF and the OWL is green, the PTF is green, everything is green down here. So things are looking good. So if you got in early, keep your stop below 3. You don't need to move it. If you have to for some reason, you can move it under here, but no closer. Most people don't make it to wave 4 because they move their stops too often and get stopped out. So you want to keep your stop low, use proper risk control and trade size when you first get in, and you have nothing to worry about. Just leave it under there and then move it when it finally breaks this 23.6 or $33 line, and then you can start to slide the stops up. So we'll look at this. If you need to look at this next week, let me know, okay? If you're in it, you want to know where to put your stop, this is a good one. All right, so, you know, we had to move up. It looks like on the short-term time frame, we're sliding down a teeny bit here, but red owl, but PTF is not red anymore. So just a normal correction. This is probably a little 3, 4, 5 inside impulsive wave C of wave 4. Notice the weekly chart, okay, also kind of pretty clear that it's heading up into a corrective zone. Whenever you have a huge move down like this, all right, the first thing you got to do is realize that you'll have a ton of shorts covering, and you'll have some people thinking a major bottom is in, and that's what causes these things to reach these fib retracement zones. All right, let's move on to a stock you want to look at now. Let's go to Netflix. Boy, Netflix should be at $1 million. I've got all my kids watching that. I have to be honest, I like it too. There's a lot of shows on there that you can get hooked on. Okay, so Netflix here. On a tear, right? Check this out. All right, so Netflix is, you know, positive on the short term, positive on the intermediate term, and positive on the long term. Problem only that I see with this is a couple things. One is, ideally, take a look at the weekly chart for a moment. The trend broke key levels of support here. This is where your entry needs to be. Notice at the time you want to go in, which is right around here. Notice that all our indicators at the bottom are no longer bearish. So that's a real strong confirmation. We kind of use these almost like checklists. Check, things are good here. Check, things are good here. Makes entering trades really easy. As long as there's no red down there, then we like to look at a move. And as long as the art system says get in, we're good. So on a case like this, the problem is this would have been the entry. This is the best time. So if you got in there, hey, great. Getting in here is very risky. Notice how many pyramids we've had. We had one here, we had 1, 2 here. All these up pyramids here, all right, are signaling once you pass 4, you're getting very risky trade because you're getting near trend exhaustion. Also, you have bearish divergence. So this is a mature part of the trend. All right, same here, bearish divergence. If you get in here, you have to have your stop so far away, or else you're just going to get stopped out on the next correction that could come any day. So you play Russian roulette when you get in late on a trend, don't you? So if you're in it, great. Then it's just a matter of where to properly put your stops. And then the question becomes one of intention. All right, if this is a 3, okay, 4, 5, then we may be nearing the end of this cycle up. And so you want to keep your stop pretty close. If you're in wave 3, then you want to stay all the way to 5. You got to make sure you have your stop below the target range for wave 4. So intention becomes everything. So in this case here, because this could be a 5, I'd put your stop pretty tight, okay? Right around in here right now. Or right below the pyramid, whichever, because you do have bearish divergence. All right, so that's Netflix. Okay, let's go on to Apple. Rose, I'm going to do one because of time. All right, so Netflix. Let's go on to XOP. I'm sorry, XOP. This is the spider for oil and gas. So let's bring this baby up here. We have had a downtrend on the 60 that's reversed. Okay, you can see it popping off the bottom. So you don't have a red PTF anymore. You have a green owl, and you still are below some of the longer-term trend lines on that short-term move down. All right, on the daily here, so you can see the breakdown here, and also you can see it on the weekly chart here as well. All right, so one of the things we want to take a look at is it looks to us like this was 3 here, okay? So let's take a look real quick and see where a fib retracement could be for this. And look, it hit the wave 4 target zone. All right, so it could be now moving back into wave 5 at this point. Okay, so you got to be careful at this point here. Doesn't mean it'll go straight down. You could have a pull up and then a move down. But at this particular point, you want to be a little careful. Okay, let's go to JCP. I haven't looked at JCP in quite some time, retail stock. Give that a second to load here. Okay, so let's take a look. Short term, we've had a little bit of a move up, haven't we? But we still have a little bit of red momentum coming back right now. Okay, the main time frame, or daily for a position trade on this, indicates a red PTF. So we're going to have lower lows. That's what the probability is on that, okay? Lower lows. All right, so this is red, red, red. So if you look at the checklist, how many people would go long here? Not too many, I would think, right? So if you're short, great. Keep your stop right here above the pyramid. You're good shape. If you're looking for a long trade, not yet. All right, it's coming down. You can even see it's coming back down on the weekly as well. So this is not a good place for a position trade, short trade at this point. Okay? Let's move on here and take a look at GDX. Let's take a look at, let me just first type in GLD too, and then we'll take a look at GDX. This, of course, is the gold ETF. The gold, I'm very bullish on. Silver, I have to wait on. All right, let's take a look here and take a look at the gold market. This looks to us like a 3. I'm on the weekly chart. 4. And so it looks to us like we're heading on up to 5 right now. Okay, that's kind of the way it's looking. So if you go waves inside of waves, you can start to see them here a little bit. 1, this is a 2. Notice 4 bottom held. We got a rebound here. So we like this as an immediate buy with a stop under wave 2, okay, in terms of a long-term trade based off the weekly chart. Now, if we go and take a look at the daily, we'll be able to see that very similar structure here, okay. Let's pop that up here. And here's a 4, okay, here, 1, 2. Notice this isn't a 3 here, a 4 rather, because the retracement was much more than a regular target zone. That's what you see in wave 2. Wave 2 can retrace 100% of wave 1. That's what you get double bottom sometimes. All right, and then here we're off to the races again. So we're liking this a lot. We don't have any red down here except for the trend line because of this little line here. But the pyramids, we had bullish pyramids, so we like it at this point and recommend this as a long trade, okay? You will get some type of pullback, so you got to put your stop under wave 2, all right, if your intention is to make it all the way to the top of wave 5. Let's take a look at GDX, all right, which is the one you wanted to take a look at. This is for JH, but you'll see a very similar type of pattern here. We go here, see that big wave 3 here, that maximum pullback here. This is actually a little bit different. This is actually indicating surprisingly quite a bit different because I don't have enough history to show that this is looking at it as a wave 4 here. So I'd have to load more history on this, but it should look just like gold, okay? All right, so that's GDX. And if you're playing purely off the GDX, notice here you've got a pennant forming. So I would expect this pennant to be broken to the upside, and if that's the case, you go higher than here. Okay? And notice here everything is green on the short term, so things are still moving up, and you don't have a red PTF down there anymore. So I think you're probably going to break more to the upside here. A little bit of a channel, but you're going to break out. All right, so let's see what else we got here. NRG. This is for James. All right, short term is bullish, and okay. So this is kind of a little bit of a quandary here, okay? First thing we want to do here is notice that the short term is got a green PTF, the long term has got a green PTF. So the midterm has got a red one. So what does that mean? Well, let's first just take a look at this thing and see what we got cooking here. All right, so we had some type of move down. It looks like we're coming up here. So actually that's fairly bullish. Looks like we probably have a pretty good bottom in there. If we go here, however, what this is saying, the PTF, is that this little low here, because that's the lowest low in the red area, all right, may not be the final one in terms of probability. So we may come back down here before heading back up. So this bottom should hold. It's not saying, this PTF is not saying that we're going below this. That's not what it's saying. What it is saying is we're going below that. Okay, so it looks to us like in terms of timing, I would probably not go into this until that PTF either turns yellow or green, okay, at this point. And it looks like, you know, it could go either way, okay, at this point. So you want to hold off until that thing is more favorable. All right, so market just opened. Boy, I can't believe it. See, time flies when you have so much fun. So, all right, so let me quickly, let's just go to the 2-minute real quick. Let me find that for a second and see what we got cooking for the open. We had a pretty sideways moving market. All right, so here is the close from yesterday. Here's the pre-market open, a little bit of a gap here. Sometimes we fill these gaps but we have a green owl and the green PTF. So I would imagine eventually the swing will be to the upside. Doesn't mean we won't fill this gap a little bit, but I would not take any short trades on this at the open. So it looks like we're going to have a fairly bullish open at this point. All right, so that is it for today. And I want to thank everybody for providing the symbols for this week. Rose, since you're a client of ours, please come to the client support webinar today that I'm holding for all our clients only, and we'll take a look at Apple for you at that point, okay? All right, so folks, have a great week, and we'll see you back here next week. And thanks so much for coming. And Don, thank you for hosting. See you all next week.